Okay, you guys, we're now going to work exercise 1-1, which should be on page 38 in your text. The exercise deals with the differences in cash basis accounting and accrual basis accounting. Now, we mentioned that some in, I believe it was chapter 2 of your financial accounting course, but let's go back over that for a minute before we start the problem. Remember, cash basis accounting is not allowed under generally accepted accounting principles unless there's no difference in cash basis accounting and accrual basis for that business. Now, an example there would be if a business required all their customers to pay in cash and they paid all their bills in cash or check, and they didn't have any accounts payable or any accounts receivable. They didn't have any prepaid assets, anything like that, then there would be no difference. Now, most businesses, that's not going to be the case, so typically a cash basis is not allowed for financial reporting purposes. Remember, we use, under generally accepted accounting principles, the accrual basis of accounting. Now, I know some of you already have down what that is, but just to review, under the accrual basis of accounting, we'll record revenues in the period in which they were earned, and then we'll record expenses in the same period as the revenues they helped us to earn, or in the same period as the revenues to which they relate. And remember, accrual basis of accounting is required under generally accepted accounting principles, except for that exception situation there that I just mentioned. So let's read through the problem, and I'm going to put this template up for you on the website, and you can work this one along with me. And then on the Connect Plus site, you will, which you should be, I'll send you out an email giving you instructions as to how to sign up with Connect Plus. It's a textbook supplement. And on Connect Plus, you'll find a problem similar to exercise 1-1. I think it's called homework exercise 1-1 that you'll work for a grade. It's similar to this problem. It'll be worked out in much the same way, but it'll have different numbers. And you can try it again and again until you get the correct answer. My main thing is not that you do it perfectly the first time, but that you work with it until you get it correct. Okay, and then we'll test on similar problems to the matching ones you've had already and the ones that we're going to work here in chapters 1 and 2. Okay, so let's read the problem. It says, listed below are several transactions that took place during the first 2 years of operations for the law firm of Pete, and Roy. Going back to that supplement, you guys will use that for homework. We might do some test through that online Connect site that goes along with the textbook. We'll see about that as we go along, but mainly we'll just use it as a tool for your homework. But you'll notice it has some other supplementary materials that you're welcome to use as well. Okay, back to the problem. We're looking at the law firm of Pete, and Roy. And for year 1 and 2, they give us amounts billed to customers for services rendered, cash collected from customers each year, cash disbursements for years 1 and 2 for salaries paid to employees for services rendered during the year, cash disbursements for utilities, and cash disbursements to purchase an insurance policy. Also, they go on to tell us you learn that the company incurred utility costs of $35,000 in year 1, that there are no liabilities at the end of year 2, no anticipated bad debts on receivables, and that the insurance policy covers a 3-year period. Okay, so first they're wanting us to calculate the net operating cash flow for years 1 and 2, which is essentially an income number using the cash basis of accounting. So let's go through that. Requirement 1, I've got it kind of set up for you here. Pete, and Roy is our business. We're going to calculate operating cash flow, And you guys, if you'll remember from the statement of cash flows, this is really that first section on the statement of cash flows. Cash flows from operating activities. And we're going to work our way down to net operating cash flow, which is really just an income number under the cash basis of accounting. Now again, we don't use cash basis for financial reporting purposes as an income number. Instead, we'll use the accrual basis. This information would show up on the statement of cash flows if we were following the accrual basis rather than on the income statement. Alright, so first, they want cash collected each year. And this is simple enough. They give you those amounts straight out. Second row of the problem, cash collected from customers. Year 1, $160,000. Year 2, $190,000. All right, now cash disbursements. Well, we had several items that cash went out for. I'm going to indent here. What do we first have? Salaries paid to employees for services rendered during the year. So cash disbursements for salaries. Okay, in year 1, cash paid for salaries was $90,000. And here we're just looking at cash coming in, cash going out on this first schedule, you guys. Cash paid for salaries in year 2, $100,000. Then we had cash going out for utilities. In year 1, $30,000. In year 2, $40,000. And then we had cash going out for purchase of an insurance policy. Cash paid for insurance, or cash disbursements for insurance. Really just two ways of saying the same thing. Insurance, we had, what, $60,000 in year 1. And nothing in year 2. Okay, to get net operating cash flow, you know, I guess we could have shown these as negative numbers since they're cash going out. I'm going to go back and do that. Yeah, hang on. I decided against it. I was going to have to make too many formatting changes. Let's just go with this. It's simple enough anyway. We don't have to show those as negative numbers. We know disbursements will be subtracted. So we're just going to say cash collected, the $160,000. So this one's going to be equal to our $160 minus the $90,000 minus the $30,000 minus the $60,000. I like using the Excel formulas. If you don't like to use those, just total it up, put in the number if you'd like. It's a negative $20,000. Ah, that's killing me. I've got to have that in brackets. Hold on. Alright, there we go. Sorry for the formatting issue. Okay, and now our net operating cash flow for year 2 had a negative $20,000 in year 1. For year 2, it's going to be equal to cash collected, $190,000, minus the $100,000 paid out for salaries, and minus the $40,000 paid out for utilities. You get a $50,000 net operating cash flow, positive number in year 2, $20,000 negative number in year 1. Okay, now if we go to requirement 2, let's read our instructions here. Prepare an income statement for each year. It says similar to illustration 1-3 according to the accrual accounting model. Well, we don't need to look at the illustration. We know an income statement would be revenues, which is what we've earned from our customers during the year, minus expenses, which would be cost incurred to earn those revenues. We try to match the expenses in the same period as the revenues they helped us to earn. So for year one, what were revenues? Well, revenues for year one would not be the cash collected from customers. Instead, it would be amounts billed to customers for services rendered. So we'll pick up the $170,000 here. Year two is $220,000. Our expenses. We're going to have salaries expense. Well, let's look at it. See if you got an idea before I show you here. Let's read it. Salaries paid to employees for services rendered during the year. Okay, what that's telling me is if we're paying employees for services they performed during that year, then there's no difference in cash paid and the expense. If we were paying them in year one, if we didn't pay them for all the services they provided us in year one, if part of that got paid in year two, then there'd be some difference. But here, the amount of cash paid to the employees was equal to the amount owed them for services rendered during year one, the $90,000. There's no difference in cash paid and the expense for salary expense here. I hope that makes sense. They were paid in year one for services they provided Pete, and Roy in year one. Same thing in year two. They were paid $100,000 for services rendered to Pete, and Roy in year two. Now, that wouldn't always be the case, you guys. They might have, employees might have earned from Pete, and Roy $100,000 in year two, only been paid $95,000, and the other $5,000 gets paid to them in year three. So the salary expense would not always be equal cash paid out for salaries, but in this case it was, because the salaries paid to employees were for services rendered during that specific year. Okay, so there's no difference. Okay, next, let's go to utilities expense. Okay. Now, cash paid for utilities was $30,000 in year one, $40,000 in year two. So the total for both years was $70,000. But let's look at that first sentence below our chart. It says, in addition, you learn that the company incurred utility cost of $35,000 in year one. So what they're telling you is utilities expense in year one was $35,000. Okay, what do we know? Well, we know that total cash paid out for utilities was $70,000 in years one and year two. So utilities expense for year two would be the $70,000 total for both years minus the $35,000 of expense incurred in year one. Gives us $35,000 for year two as well. So if the total expense for both years was $70,000, the expense in year one was $35,000, then the expense in year two had to also be $35,000. Notice that's a difference in cash paid. Under the expense was $35,000 in each year. Cash paid though was $30,000 in year one, $40,000 in year two. All right, now let's go to insurance expense. Okay, here we paid for the insurance policy we paid for the insurance policy $60,000 in year one. But let's read the last part of that sentence below the chart. It says the insurance policy covers a 3-year period. Well, if it's $60,000 that we paid for 3 years, our insurance expense would be $20,000 per year. or the $60,000 divided by the 3 years. So I'm going to put it in that way, equals the $60,000 paid divided by the 3 years. So our insurance expense for year 1 is $20,000, is $60,000 divided by the 3 years paid for year 2 as well. So our insurance expense was $20,000 both years. So year 1's net income would be equal to what we earned from our customers, the $170,000, minus our expenses, $90,000 for salaries, $35,000 for utilities, and $20,000 for insurance expense. Gives us a net income of $25,000 in year 1. Much different than the negative $20,000 in net operating cash flow. Essentially, our cash basis income would have been a negative $20,000, but under the accrual basis of accounting, which is what we use in GAAP, or generally accepted accounting principles, would be a positive $25,000. Okay, now for year 2, we take what we earned from customers in year 2, the $220,000, minus our expenses for year 2, $100,000 for salaries, $35,000 for utilities, and $20,000 for insurance. Gives us a net income of $65,000 in year 2. Both of those numbers exceeded the cash basis income numbers, you guys, or our net operating cash flow for those years. These numbers are really a more accurate measure of how the business performed in years 1 and 2. Okay, now requirement 3, they want to know our accounts receivable balance at the end of year 1 that would show up on the balance sheet, and the accounts receivable balance at the end of year 2 that would show up on the balance sheet. Well, I gave you a little formula here under your template. Let's go on down. I called it a hint. Your formula would be, you probably figured this out already, but the beginning accounts receivable balance plus what we billed that year minus the cash we collected. And that should make sense. Whatever accounts receivable was to start the year, okay, we'd add to that or increase accounts receivable by what we billed our customers, decrease it by what we collected from our customers. Whatever's left over would be our ending accounts receivable balance. So let's do that for year 1. I'm just going to do it right here. Okay, to start the year 1, we'll say that's the first year, as far as we know, it's the first year of, or they tell us, it's first year of operations for the business. So their accounts receivable balance to begin the year was 0. Plus, what did they bill during the year? Amounts billed to customers for services rendered, $170,000. Minus, what did we collect from customers? $160,000. It gives us an accounts receivable balance at the end of year 1 of $10,000. Okay, now at the end of year 2, the accounts receivable balance would be equal to $10,000. The balance at the end of year 1 would become the balance at the beginning of year 2. So our accounts receivable balance to begin year 2 would be $10,000. Plus what we billed customers during the year, $220,000. Minus what we collected from customers in year 2, $190,000. And that'll give us our accounts receivable balance at the end of year 2, $40,000. You guys, after watching this video and practicing this one with me, you should be ready for your first homework exercise, or the first one that's actually a problem. You'll complete that on that Connect Plus site, and you've got the link to sign up for it in the email. I don't know, I really love this kind of problem. I hope you enjoy it as well. And these are the kinds of calculations and kind of oddball things that we'll be doing some in intermediate, and I hope you enjoy it. If you have any questions or concerns, please feel free to email me anytime, or you can reach me on my cell, and you have that information on the syllabus. Thank you.